Why is day trading, making money online with stocks or really Forex or futures or anything so hard? I mean, if you've ever seen the statistics, then, I mean, they're varying across the board, but at the core, they all suggest that you're going to fail. I mean, some people will say it's 90% failure rate. Other people will say, no, it's actually 95% failure rate. But why is trading so hard? Well, in my opinion, and this is just my opinion, it's because financial markets are a bizarre place. They're not like the vast majority of other things in the world because they reward bad behavior. What do I mean? Well, let's look at some other normal instances. If you go and there's a stove that's hot and you touch that stove, is there at any point where you're gonna be like, oh, wow, that was a wonderful experience. I just touched a hot stove. That was amazing. No, of course not. Touching a hot stove does not reward bad behavior. It burns your fingers, right? How about this? Hey, Billy, you showed up 2 hours late to work today. Here's a raise, my friend. Here's some more money. Now that just sounds ridiculous, right? Showing up late for something, bad behavior, is not going to be any sort of reward, right? If anything, you're going to get fired. You're going to get a big old warning, but it's not going to be like rewarded. So do you see how most things in life, when you behave in bad ways, well, you get a direct correlation result. You get a bad response, but not so in the market. The markets are totally different. The markets, you can behave in bad ways. And you know what? You can walk out saying, wow, all right, I made money. So in the market, the logic goes, so it's not irrational to think this way, but most people say, wow, I made money, therefore I did it the right way. I did something right. But that is so not true in the market. But I think that's why it is so difficult. So instead of just sitting here and giving you my broad thoughts, I now want to take you to my desktop here. I want to walk you through a couple of examples that really just show how bad behavior can actually, well, turn out to be a good thing. But again, the rational person is saying, hey, I made money, therefore I did something right. No. And then all it takes is one little example, which again, I'll show you. I'll end it all with that one example where, things can turn around in quite a bit. But in my opinion, as you're about to see, this rewarding of bad behavior, that's why I think trading is so difficult. So let me show you what I mean. All right, welcome to my desktop here. The first chart we're going to look at is for ticker symbol GNUS, which has been a very popular stock as of the recording of the video. Now, I do realize that if you're watching this video months or years from now, then GNUS may not mean anything to you, but just understand I'm after the behaviors, right? So the exact ticker symbol doesn't matter. It is just more so about how you are behaving and then what happens after you behave in these certain manners. So for this example, just a quick little analysis, that was right there, the resistance point. So in other words, that could be a breakout point, meaning, you know what, buying right there, I get it. I understand. It's breaking out right there. Fine. But think about this. There were people that bought there and there and there, and somebody bought literally the exact high, meaning the breakout point was down here. Yet people bought all the way up there. That is known as chasing. That's not a good behavior. That's a very bad behavior. You don't want to chase stocks. So think about that. Not only did those people buy up here, then they let the price fall all the way back down here. So that's what that candle represents. The closing price was actually right here. So to think they bought up here and then just watched it drop and drop and drop and drop and hold and hope. That is not a good behavior. But let's see what happened to these people. Were they rewarded for their bad behavior? So next day works up a little bit. Next day goes up a little bit more, getting close. And then look at that. But guess what? It's not over. Look at that. And look at that even more. So let's think about this. How crazy is the market? You had people that, as you saw, got a terrible entry point. Terrible. Yet, by behaving badly, by holding and hoping, they then had the chance to potentially get all the way up there, a very nice win. Truly a bizarre thing. And I realize the argument, well, Clay, how can you say what they did was wrong? Because they ultimately turned out to be very right. And that's a fair point, but let's just go through some more examples. So here is another one, ticker symbol XSPA. Once more, ticker symbol not important, but the behaviors. So think about this one. The price was down here, and then we had what is a gap up, meaning the price closed here the previous day, opened up the next day right there. So after the price opened up, things actually kept on moving higher and higher and higher. And think about it. There were people that bought way up here. That is, once again, totally chasing the price. It's buying something that is gapped up already and then begins to move and move and move. And then after they bought, so again, bought right there, look what happens. The price falls and then falls and then falls and falls all the way down to that point. And they were holding and hoping, holding and hoping. So let's see how this one plays out. So it comes back up a little bit, but starts to drop again. Look at that. They bought way up there, and now it has moved several times over $1 against them. And when you're talking about $1 against you on a stock that's below $3.50, I mean, that is a very big percentage, but they've let that very big percentage go against them. Not a good behavior to have at all. But what ultimately happens? Well, look at that. Things start to come back to life, and then kaboom. There the price goes, and then there the price goes even more. So again, very bad behavior, ultimately being rewarded in a big way. Here we are looking at TTOO, and once more, you can see that, I can see buying somewhere right around there, right? That's the breakout point, fine. There's nothing wrong with that. I understand that. But let's look at what actually happened. So once again, the price gapped up, and then after the price opened, the price ran and kept on moving upwards and kept on moving upwards. And right up here, you know that given the data, people were buying. People bought there and there and there. So they bought, chasing the price. Not a good behavior, a terrible behavior, a bad habit, and something that's not going to allow you to make money in the long run. But let's see what happens after that. So they chased, literally bought up there, which is way, way below, where the price had, been. Compared to, much higher than where the price had been. So in other words, it's very overextended, and yet people are still chasing and buying. So not shockingly, think about it. Look at that pullback. So the price went from literally people buying up here just below $1 to all the way down there to essentially as low as 60 cents. And then what happens? Well, bad behavior was ultimately rewarded. And look at that. Now those people feel like geniuses. Look at this. I'm making so much money. I'm so awesome. And look at that. But let's think about it again. Look at this move. So maybe some other people were watching, and they're watching it get up and up and up. And you know what they're thinking? Well, fine. You know what? I watched it long enough. I'm buying. And people were buying up there. Think about how much chasing that is. The move started right here. Again, I can see buying a breakout right there. Okay, that makes sense. That's not a bad behavior. That's buying a breakout. I understand that. But there were people that waited for it to get all the way up there before finally buying. Totally chasing. Completely a bad behavior. And apparently I'm going through puberty here as my voice cracks. But why am I getting hair under my armpits? What's going on? Anyways, okay, so the price, they buy up there, and then the price pulls back all the way down here. Think about it. That's crazy. People were buying here, and you could have behaved in such a bad way where you let the price go down, go down, go down, go down, all the way there, and let's see what happens to those people that behave in that manner. Well, just like that, the market says, hey, good job. And they give all those people money once again as the price goes back upwards. So do you see what I mean here? Bad. And these are like atrocious examples. This is like the worst of worst behavior that you could have out there. And yet, even with the worst of worst behavior, you could have still actually made money, which is crazy. So let's now take a look at the opposite side of things. And instead of just sit here and talk in theory, I want to just show you some people that, and this is from my other YouTube channel that I have where I do my chart analysis videos, but I did one on ticker symbol NCLH, and you can see right here, this person is commenting, my NCLA, LCLH is in huge loss right now. Another person, same. Somebody else saying, honestly, I'm scared, and you'll probably see why they're scared. And then this person comes in and, don't panic and get emotional from fluctuation. And again, this person is in denial. That's what denial looks like. Because when you see what happens, this is a bit more than fluctuation, okay? So NCLH, this is what happens, when kind of reality shows back up. So here's the NCLH chart. And yeah, you can see how people could have behaved badly and still made money. This move all the way up there, plenty of opportunities for people to, behave badly, right? I mean, you can see, and I'll just point out one here because you get the idea now. I mean, people could have chased the price right there, bought it, let it go all the way against them before getting bailed out. People could have, chased the price right here, right? Bought right there. I mean, think about these people buying right here, letting the price go that far against them, and then they actually made money on it. Even these people, to get crazier, you go back here and you look, let me move this out of the way. People could have bought all the way up there, let the price come all the way down there, and eventually they made money on it. And I get it, it's tempting, but those people that you just saw, one person said, I'm scared. I can understand why. Those people, that I guess I don't know for sure, but based off the dates of which, they were commenting on that video, those people were either buying essentially on this day. Maybe on this day right here. So think about it. Buying way up here, and right now the price has come all the way down there. Now, to be fair, as of now, the price has come up a little bit. I mean, could it return back upwards? It could, but it's the behaviors. It's the behaviors that I'm getting at here. If you think that buying something right here, letting it fall that far against you is a good habit, then you are sorely, sorely mistaken, because it only takes one of these to happen. And what do I mean by one of these? Well, welcome to the world of JFIN. And I realize that this may not look like a real chart, but it is a real chart. The price gapped up and opened right there. And then this is not a faulty print. This literally happened. The price went from, we'll just call it $11 in the same day all the way up to $30. $30. So think about it. All those bad behaviors before, everything that we've been talking about, people chasing. People were buying there. People were buying there. And it's, based on how candlesticks work, somebody went out there and hit the offer at $30. And who knows, maybe that person played GNUS. Maybe that person played XSPA. Maybe that person played some sort of other stock where they were, they would chase the price, buy, and then, the price starts to pull back. So that person's thinking, it's all right. I remember GNUS. It'll come back. Pulls back some more. Oh, I remember XSPA. It'll come back up. Pulls back some more. Oh yeah, I remember some sort of other stock where maybe they behaved really badly, but it worked out for them. But this one has never come back up. And look at that. On the same day, it closed at $5.80. I'm just doing this spur of the moment because I'm actually really curious, but we'll do it together. So from $30 to $5.80, what is that? That's a drop of 81%. So they have lost 81% of their position where it closed. But that's the thing, is it actually kept going down lower and lower and hit a low of $3.47. So let's change this to $3.47. 88% of the money gone. And think about it. That there's people, and what most people do, maybe you've been there, is they'll take those gains and then they'll put them into the next one, right? Compounding interest, which, don't get me wrong, it's a great thing. Compounding interest is awesome in the world of investing, but they're thinking their egos are getting big, your confidence is getting big. So maybe they just fund more money into their account, and then some sort of stock like this comes along and they're pouring so much into it, and you can see right now, absolutely crushed. As of the recording of this video, it's at $4.55. But I mean, even if you got in at $25, so let's change that to 25. These are all still 86%. Massive, massive losses. And quite frankly, if this doesn't serve as a wake-up call to you, I don't know what will. But yes, there are lots of cases out there where you can behave very badly and get rewarded. But all it takes is one JFIN, just one JFIN, and your account is destroyed. So let's go back to me at my desk. Wow, that last one was rough, wasn't it? But I mean, think about it. All those other examples, buying the top, chasing, literally getting in at the worst possible time, letting prices go severely against you, but then just holding and hoping and then being rewarded in a big way. I mean, think about that. That is such terrible behavior from a trading standpoint, then being rewarded. And you're walking away making a bunch of money. And then you do it again. Oh my goodness, you literally chase. You do so many things wrong from a disciplined trading standpoint, but then you hold and hope, which again, of course, is another thing that's wrong. and then you make more money. Oh, wow. And it will happen. It's not if, it's just a matter of when it's going to happen. Something like JFIN shows up, and see ya. You get a cold hard dose of reality. And sure, it may not wipe away all your gains. I mean, in many cases, it wipes away all their gains, and then it actually eats into their principal. And then they either just give up because they either get wiped away, or they get frustrated, or they think all the markets are just rigged. But no, it's just because you don't actually know what you're doing. And you have all these bad habits that were built because, well, your bad behaviors were actually rewarded in the first place. So that's why I think this is such a difficult business, because it's so unique. I really struggle to think about really any other places in the world where bad behavior actually makes you money, right? I mean, just again, another quick example. In the world of sports, wouldn't it be awesome if you're like, no, lifting weights, running, staying conditioned, I'm not gonna do that. And then people are like, wow, you just got even better. You got even better by sitting on the couch watching Netflix and Disney Plus while you stuff Cheetos in your face. Wow, here, let me pay you more money because you got better. That just doesn't happen. It just doesn't happen. But in the world of trading, it does happen, which just sets up so many false pretenses and false mentalities that, yeah, at least in my opinion, it makes sense why it's so hard and why so many traders fail. So all I'm asking and trying to convey to you is, and be honest with yourself, are you sure that you're having success because you are actually behaving in right ways, or are you just getting lucky a little bit? Are you behaving in very bad ways that, yeah, maybe it's hard to admit to yourself, but maybe that's why you're actually making money. You're just getting bailed out by the market. And if you could admit that to yourself, I mean, bravo, well done. I respect you. At least you're being self-aware. But way too many people, they trick themselves. They stay ignorant about it. They stay arrogant about it. No, I got it all figured out. I'm like a prodigy. And then unfortunately, there's some sort of JFIN that eventually comes across and punches them in the face. And I don't want to see you get punched in the face, but that is why I think trading is so hard. Now, if you agree with me or disagree with me, I'd love to hear why. Leave those down in the comment section below. If you just enjoyed this video as a whole, please hit that like button. And then also check out the channel. There's lots of other types of videos, and hopefully you decide to hit that subscribe button. I'd love to have you as a subscriber to the channel. But get out there, be aware, and be honest with yourself in regards to whether or not maybe you've been behaving badly, but the market's just been rewarding it only to be setting you up, because I don't want to see your JFIN come along before it's too late. So just be self-aware, and hopefully you can avoid any sort of massive sledgehammer directly into your face. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.